Welcome to Coverage Clarified, where we make insurance simple, clear, and jargon-free. Today we look at what a life insurance beneficiary is and why it matters when you have a policy. A beneficiary is the person or people you choose to receive the money from your life insurance policy after you pass away. This choice shapes how the funds are handled and who ultimately receives them. This video gives general education only and is not financial or insurance advice. Everyone's situation is different, so it is important to talk with a licensed insurance agent or a qualified financial advisor before making decisions. Understanding the role of beneficiary helps you see how the policy works in practice and what steps you might want to review with a professional. We will walk through the basic ideas with everyday examples, so the terms feel less confusing. A beneficiary is simply the individual or group you name to receive the death benefit from your life insurance policy. The death benefit is the amount the insurance company pays out when the insured person passes away. Think of it like listing who should receive a specific gift you have arranged in advance. In most cases, the beneficiary can be a spouse, a child, a parent, or even a trust set up for someone else. The key point is that this designation tells the insurer exactly where the money should go. Because the choice is part of the policy paperwork, it becomes a clear instruction rather than something left to interpretation later. When you first buy a policy, you will usually see a section asking for beneficiary details, and you can often name more than one person if you wish. This is a good moment to ask a licensed agent how the form works in your state and what options are available on that particular policy. Many policies let you name both a primary beneficiary and a contingent beneficiary. The primary beneficiary is the first person or people in line to receive the proceeds. The contingent beneficiary steps in only if the primary beneficiary is no longer living or cannot be located at the time of the claim. For example, you might list your spouse as the primary and your adult children as the contingent. This layered approach gives a backup plan without needing extra legal steps in many situations. It is worth asking your agent how the policy treats multiple primaries if you want them to share the benefit equally or in specific percentages. Some policies also allow you to name a charity or an organization as either primary or contingent. Because rules can vary by state and by the wording of each contract, it helps to review the actual form with someone who understands the details of that policy. When you apply for a life insurance policy, you will be asked to provide the full legal name, date of birth, and often the relationship of each person you want to name. Clear identification reduces the chance of confusion later when a claim is filed. You can usually name individuals or a trust, and some policies allow you to list percentages, so each person receives a specific share. If you do not name anyone, the policy may pay the money to your estate, which can involve probate court and extra time. That is why completing the beneficiary section carefully matters. Many people review this part of the application with a licensed agent to make sure the names and percentages match their intentions. It is also useful to ask whether the policy allows you to name a minor child directly or whether a trust or guardian arrangement would be clearer under your state rules. After the insured person passes away, the beneficiary or their representative contacts the insurance company with a claim form and a copy of the death certificate. Once the paperwork is verified, the company releases the proceeds according to the beneficiary designation on file. In most cases, the money is paid directly to the named beneficiary rather than going through a will or court process. This direct path is one reason people choose life insurance in the first place. Because the payout follows the beneficiary form rather than general inheritance rules, it can reach the intended person more quickly. If the beneficiary has questions about taxes or how the funds are reported, they can ask the insurer or consult a tax professional. The exact timing and required documents can differ by company and by state, so the beneficiary should check the policy or speak with a representative to understand the steps for that particular contract. Life changes, such as marriage, divorce, or the birth of a child, often mean it makes sense to update the beneficiary list. Most policies allow you to change the designation at any time by completing a new form and submitting it to the insurer. The updated form replaces the earlier one and becomes the official record. Keeping the information current helps the proceeds reach the people you intend at the time of claim. It is a good habit to review the beneficiary section whenever major life events occur and to confirm that the insurer has the latest version on file. Because each policy may have its own process for submitting changes, it is helpful to ask your agent or the company directly how to make an update and whether any witness or notarization is required in your state. This simple step can prevent unintended outcomes later. When you meet with a licensed insurance agent, it can be useful to bring a short list of questions about the beneficiary section. You might ask how the policy handles multiple beneficiaries and whether percentages can be assigned. Another question is whether the policy allows a contingent beneficiary and how that designation works if the primary is unavailable. You can also ask what documents a beneficiary will need at claim time and how long the typical payout process takes with that company. If you're naming a minor or a person with special needs, it helps to ask whether a trust should be considered instead of a direct designation. Finally, confirm whether the policy lets you update the beneficiary later and what steps are required to make the change official. These questions give you a clearer picture of how the mechanism works without committing to any specific plan. A life insurance beneficiary is the person or people you designate to receive the policy proceeds, and keeping that designation current helps the money reach the right hands. We covered the basic definition, the difference between primary and contingent choices, how to name someone, the payout steps, and why updates matter after life changes. Before you make decisions about any policy, ask a licensed agent how the beneficiary form works on that contract, what documents are needed for a claim, and how updates are processed in your state. Subscribe to Coverage Clarified for more plain language explanations of insurance terms. Remember, Coverage Clarified is general education, not financial or insurance advice. Everyone's situation is different. Prices and rules change and vary by state. So always talk to a licensed insurance agent or a qualified financial advisor and check current details with an official source before making any decision.